For today's Targets in Focus, I'm joined by John Keynes, who is a currency strategist at Rand Merchant Bank in Johannesburg. Good afternoon, John. Now, first of all, I'd like to start by discussing the British pound. What's behind the pound's recent strength, and as a result of the currency's recent performance, how do you see the pair pound-dollar trading over the next months and indeed looking further forward?
Well, we've long thought that sterling has been oversold. Obviously, the UK economy was badly affected by the crisis, its exposure to the financial sector and so on. But nevertheless, sterling has been trading so far below its long-term averages against both the euro and the dollar, despite those two currencies also being exceptionally weak. So I think the recovery in sterling has been a long time coming. I'd put it mostly down to a correction from oversold levels. But it's probably partly a relative basis, is that relatively speaking the UK is doing better, particularly against Europe that is now confirmed to be in recession effectively, and in a deeper and longer recession than anyone expected.
What are your 1 month, 3 month and 12 month forecasts in that case?
Well, we're going to have to be looking at our sterling forecast, but yeah, by the end of the year, 167, even 170 on cable seems quite reasonable. I don't see why we can't have that if things continue the way they are.
Dollar yen is currently holding back above 80 after dipping lower at the beginning of this trading week. Considering the Bank of Japan's most recent bout of easing, what are your FX forecasts for dollar yen in the short, mid and long term? And of course, John, why?
Yeah, we don't have any strong calls on dollar yen at all, and I think it's justified to expect it's going to move sideways. I think the market got ahead of itself in April when it started to price a lot of yen weakness. So, as you know, that was based on this expectation of considerable easing by the Bank of Japan. The extra 5 trillion yen that we saw in the end wasn't all that considerable. So it doesn't seem like the Bank of Japan has got around to this significant easing of monetary policy that would be necessary to get the yen to weaken again. But below 80, the market still fears intervention. So just tracking sideways from here, no great shakes either way. I think the volatility of April is not going to continue in the months ahead.
Before I go on to talk specifically about the South African rand, considering this constant risk-on and risk-off environment, how have emerging market currencies been performing in general over the last few months?
Well, risk-on, risk-off affects only certain emerging market currencies. When we think of emerging market currencies, it's worth differentiating between those such as the South African rand, Brazilian real, Turkish lira, Mexican peso that are very much seen as risky currencies that trade in line with, say, the Aussie and the Kiwi. In other words, they carry trade currencies. The main influence is their large interest rate differentials, and so therefore are affected by risk-on, risk-off. The other emerging market currencies are not driven by risk-on, risk-off, particularly if we're thinking of the Asian currencies. So Singapore, Malaysia, Thailand, and of course China. China is still very much a controlled currency. In general, what we've seen across those currencies is concerns over the global economic situation. So gains that we saw in the early part of the year haven't continued. The risk currencies, again, the high-yielding currencies such as the rand, the Mexican peso, Brazilian real, Turkish lira, have reflected the concerns over Spain, weakened considerably through March and in April, but now starting to gain again. But at this stage don't really have traction to go significantly stronger break.
Okay, so what is your outlook for the South African rand, and what about your projections for dollar rand in the coming 12 months?
The rand is an exceptionally volatile currency, along with the Brazilian real. It's the most volatile currency in the world. We at Rand Merchant Bank have got a call for a strong rand this year. That's based on an expectation that global growth will continue along at its moderate pace, and that we will not have a blow-up and risk because of the Spanish situation. So on dollar rand, we're looking for a year-end target of 720. That's meaningfully stronger than the 775 that we're trading at as we speak, but it's nothing considerable for the rand to do. The rand can do that in a month or two if it wants. It's a really aggressively moving currency.
Thank you, John, for sharing some of your latest forecasts. Now, coming up on Dukas Copy TV this week are more press reviews, interviews and an interview with US economist David Resler from Nomura ahead of NFP Friday, so make sure you stay tuned. But for the moment, goodbye.